Hey there traders, welcome to the Traders Haven Pip Banker Sessions video summary. What I want to do is give you an idea as to some of the patterns that we look at. Now, in line with making our videos a little bit more instructional as we've promised, what we're going to look at today are 3 examples of patterns that set up today that we trade in the Pip Banker Sessions on a daily basis. So have a look at this pair that you got in front of you right now. It's the Aussie Yen on the 1 hour, and have a look at this. We had a downtrend in place, we came to an area of support, and look what shaped up here. Now, some know this as a bullish outside bar, some know it as a bullish engulfing bar. The point is, how do you handle this? Well, the bullish engulfing means that we should be getting some topside out of this pair for a while, right? So you'd want to trade it along, but where do you get in? Well, a number of people will say, well, at the open of the new candle, you get in. So if you'd done that, you would have had to be able to sustain at least 28 pips on your stop loss without being stopped out. Very few people these days actually trade with stop losses that are much bigger than that. So it's kind of tough to go through that kind of drawdown, especially if you're intraday trading. So another way to handle this sort of a pattern is to take the pattern in the direction, right, which is from the bottom to the top, because remember this pattern is looking for a topside action and it's a bullish pattern. You measure off, let's say, a 50% fib, which happens to be right there. All right. Now you can use the 30, the 382, the 50, or the 61. For the case of the Pip Banker Sessions, we use the 50 quite a lot. We like the 50% fib. There's the 50. Wait for that to get pegged, and that's when you enter long. Now your stop loss is still, in the area of about 30 pips, but at 30 pips drawdown on this pair, you would be out of the trade and you'd know you're wrong. You wouldn't have to go to 60 pips drawdown. You wouldn't have to go to minus 30 pips and still be wondering if this is going to go further against you another 30 pips. So you're able to keep your stop loss at around about 30 pips, right, and not make it much larger than that, and you've got a very good entry on this bullish pattern. So there's your retrace to the 50%. You enter long, and if you have a look at how this trade developed, you'll see it got up to about 135 pips profit. Now, how do you know when to get out? Well, you wait for a reverse pattern, a nice little signal pattern, right? And what you had right there is a bearish sign. Right? So if you were waiting for that close, you could have gotten out at 89 pips profit. So that's a nice 89 pips profit on a Aussie Yen 1 hour chart. Right, and that little bit of a shooting star there is what would have told you it's time to cut this trade short. So let's go and have a look at a couple other patterns, right? And today was beautiful for these bullish outside or bullish engulfing bars. Have a look at the pound yen. We're looking at this pound yen here. There was a trend line in place, sure, but before we even got near that trend line, so let me remove that. What do you have right here in an area of support, right? We had a pullback showing us that the price didn't like being down there. It came back there again, closed, and we had a bullish Mirabozo, guys. This is a candle without any wicks to the bottom or the top. That is an extremely bullish sign, a bullish Mirabozo. That also was a bullish engulfing or bullish candlestick pattern. So what do? Well, you fib the pattern. Let's do it again. Fib the pattern. Put your marker on the 50%, right, which in this case happens to be right there. Okay, there you get pegged into your trade and you wait for a reverse pattern to shape up. Now, you could have used this dark cloud cover and gotten out at 167 pips profit, or you could have waited for that shooting star and got out at 188 pips profit. Either way, a fantastic trade off a single simple pattern, right? Well, let's move on. Have a look at one more here with me. The Euro Yen. Again, trend line, but before we even got there, let's delete that. What did we get? Area of support and a bullish engulfing pattern. Guys, you see that these things happen quite a bit. This is not a pattern that we're looking at that never happens. It's tough to find. These happen quite a bit, right? In the case of this downtrend, there is a bearish engulfing. There is another bearish engulfing. These patterns happen all the time, right? So how do we know that we should take this bullish engulfing? Well, at the time when we were looking at our pivot charts and so on, this made sense. There was a logical level. It made sense that we should find some support here. We don't just take them randomly. There was a level of support. We saw the support. There was the bullish engulfing. So again, what do? You take the pattern from the bottom to the top, right? Throw on your line there at the 50%, which happens to be about there. And let's get rid of this and have a look at this. If you take that up to the next bearish candlestick pattern, you've got about 124 pips off that one. So easily in excess of 380 pips today, just based on 3 simple little patterns on the 1 hour chart. So I hope you found this instructional. I hope you enjoyed it, guys. If you did, rate the video. If you'd like to see us set these up and trade them in the live market, pop over to fap-tradershaven.com and join us in the live sessions. We'd love to have you in the sessions with us in New York as well as in the London session. Cheers.